Welcome back. You're tuned into Bazaar Morning Call. Let's welcome Amnish Aggarwal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Amnish, it's raining blocks. Now we know why the mutual fund industry is sitting on a lot of cash, which is the highest that we've ever seen as a percentage or even in absolute terms, at around 7% or thereabouts. And in absolute terms, it's more than 2 lakh crore. That said, what's your view on a couple of these larger names? Like IndiGlobe Aviation, we understand the promoter entity wanted to sell some stake. Now, source-based information that's coming in is indicating that actually the promoter entity is upsizing the size of the block. But that's been a stock that's, any kind of supply has been gobbled. Your view on the stock?
See, hi Nigel. IndiGlobe Aviation actually has been doing quite well. If you look at, say, particularly a few quarters, the numbers have been good. It is operating at, say, around 86% utilization, and now the crude prices are also benign. So that is also going to benefit. And moreover, the kind of market share it is having in the Indian market, which is one of the fastest growing market globally, that makes IndiGlobe Aviation currently sitting in a very sweet spot, at least in the near to medium term is concerned. Now, I think the promoters have been selling the stake, and it is something which is not new. But every time I think the stock is being lapped up by institutions. If you look at last couple of years, the stock has also got re-rated. It used to earlier trade at 6 to 7 times EV to EBITDA, but now that has gone into a double digit of around, say, 11 times odd. But looking at the prospects of travel, tourism, and the aviation sector in India over the medium term, we remain constructive on this name.
And SpiceJet doesn't deserve a look in. IndiGlobe is what you're positive on, but you would not look at SpiceJet?
You see, SpiceJet is more like, time and again, it has been raising the funding, but somehow the expected turnaround is not happening. And that is where then the investors' patience also goes out. Now, given the prospects, one would have expected that SpiceJet should turn around at some point of time, but somehow I think they are not able to gobble up the kind of efficiencies which are requiring. So I think it is better to stay with the leader rather than to continue, you can say, expecting a turnaround in a name which has not happened in the near to medium term.
Okay. All right. Amnish got that point.
Amnish Aggarwal is still with us. Amnish, we heard the discussion we had with KEC International. Last year was a bit of a softish year, though for this year they're guiding that things will be better. Revenue growth in mid-teens, margins improving by around 50 basis points, and the net working capital days, after improving by around 12 days, will improve by another 10 days, which means that, that overall borrowing as well remains under check. What's your view on the stock?
You see, we are constructive. We have an accumulate rating on this name. And the main thing is last year, many of the businesses were not doing well. But I think the growth there is expected to revive. That is one. The second is that in this industry in particular, what is more important is how you manage the working capital. And the improvement in the working capital particularly is positive because free cash generation in some of these TLT companies and some of the other businesses which they are conducting. So that is something which is very important. So I think looking at these two aspects, although the numbers have been, I would say, not that great, but the future is reasonably optimistic.
All right. Amnish, what about Eternal, erstwhile Zomato? What's the view out there? This is a big week actually because there are two rebalances that will take place. FTSE takes place today, and we have MSCI that takes place on Friday. The stock is at around 225. I think the rebalance announcement with regard to FTSE was a bit of a shock. That's why the stock ended lower. However, the stock, there is a big DI holding in the company, and there are a lot of active mutual funds that hold the stock, which are sitting on a lot of cash, which could support the stock going ahead. Your view at around 225 rupees?
See, fundamentally, it is in some sort of I would say, range-bound situation because the industry is going through lots of ups and downs. There is immense competition which has cropped up more on the quick commerce side in the past 2-3 quarters. And looking at the kind of, you can say, players which are now entering this space, expanding, I think there is very limited visibility as far as quick commerce is concerned, at least for the near term. Now, the current softening of the stock price has happened more because of the technical factor, because The foreign holding in the company is now below 50%, so it has gone out of some indices, etc. So I believe that while there could be some, you can say, interest to lap up the stock at the current correction, but at the same time, if you look at say next 2-3 quarters, I think numbers are not going to be anything exciting, at least in the near to medium term. While in the long term, I think we need to be clear that you can say that things could turn out to be better, but at least in the near to medium term, I think the stock should be range bound between say maybe 200, 230, 240 levels.
I got that. By the way, let's just look at BEML if we can. Was a big 16-17% gainer yesterday by close. Let's see where that is starting. About 0.5% higher. A few of these names, right? NetWeb was a big winner, 6-7%. These have all been running up lately. Phenolix Pipe was another one. Actually, a lot of the pipe makers, Astral, Phenolix, etc., they all were higher in trade yesterday. I think Nimesh was talking about that on D Street Chatter yesterday. Shilpa Medicare, and I think we'll talk about Shilpa with our pharma analyst in a bit from now. Gillette reported numbers during the closing last hour. Gillette will come up on your screen. Again, it ended about 8-9% higher. Camlin Fine was a stock which there were I think 2 brokerage notes. We highlighted this yesterday. Camlin Fine 16% higher in terms of where it closed. And IT Decementation. Another one is Cosmo First. Completely bombed out name, but just look at what has happened over the last, I think, 5, 6, 7 trading sessions now. Cosmo First has basically done 10% on trot for the last several sessions. So many names here. Anything strikes a chord, Amnish? Anything you track out of the names I mentioned?
Yeah, you see, BML, which you talked about, is one name which we tracked. And this company actually is sitting on a lot of orders. And the problem last year was that the execution of the orders was not there. Now, if the execution comes into play, and the fact that this year, I think the execution more from the, you can say, armed forces will also be better. I think this is one stock which one, you can say, need to watch out for.
Need to watch out for BEML in that sense. Balkrishna Industries, any thoughts? I mean, was down sharply after numbers. Amnish?
No Prashant.
Okay, no real comment. Anything you like out of the hospital space? Again, I mean, it's a space which has done very well. The latest addition to the entire move higher has been HCG, the cancer specialty hospital. After the financial investor changed hands, I mean, the stock's done very well. Yesterday was down, though, a little bit of profit booking. What's your pick out of the space?
You see, the space has been doing very well. It's more like, you can say, one of the very structural themes which we have been pushing from last couple of years at least. Because here, you can see the margins of most of the players are improving. ARPOB is good. And particularly this HCG, because the KKR, I think, now has acquired stake in the company, and there's a lot of scope to improve the efficiencies over there. So that is one name which might struck chord in the coming times. But if you look at, say, among the existing players, I think Max is a very structural play, good margins, good profitability, lot of capacity which is coming in terms of, say, you can say the bad addition which is happening over there. In addition to it, we are also positive on Aster DM, because Aster is also again undergoing consolidation. Once Quality Care gets subsumed into this will be the third largest player, trades at say 20-25% to some of the other large names. So I think these are the 2 stocks, and then your Rainbow is also there. So I think the space looks very exciting, and it is only, I would say, where the efficiency comes, the growth comes, and I think all the good stocks eventually, wherever the valuation scopes are there, they can trade anywhere between 30, 23, 25 times EBITDA. And one can continue, you can say, holding some of these names for the, I would say, next 2-3 years, because still there's a lot of room to make money.
Okay. All right, Amnish, got that point. Thank you very much for being with us. Great to get all the perspective from you on those stocks that we've discussed.